All right, well, we got Rob Smith on there. We get Dave Frank and Red Bank, and we'll do this meeting. Frank, you there? I'm here. Okay, if you could just turn that up for the meeting.
And we told support about their value. So you're looking at a lot of stuff.
So what do we got going on today, Eric?
Give you about 30 seconds, or 34 seconds, sorry.
Okay.
First of all, on the blog this morning, the importance of trading something at the exact right price, and I'm sure Brendan will back me up on this, it's just so important. The example I cited was a few weeks ago, and I think you were in this trade with me. I know Rob was, Keith was doing this too. Seed was trading at 11.29 pre-open. It was in a range of about 10.75 to about 11.29, and refreshed over and over and over again. And all the time, people saying, "You can buy this at 11.28. You can get it early." No. You can 11.29. No. You wait until the 11.30. You buy it above where it's refreshing. I noted that in the chat room. I noted in the audio. And Brendan, I'm sure you've seen this so often. This phenomenon of people buying it. If you see someone things at a high of the day or low of the day, there's a refreshing offer, a refreshing bid. You wait for that seller or that buyer to
It has to go.
and that was basically, in essence, what I said in the blog this morning. Markets overseas are down across the board. Hong Kong's down about 1%. Europe prices are down 1.5%, 2%. The euro is weak against the dollar. Dollar's strong against the yen right now. I'm sorry, the dollar's weak against the yen. Commodities are down again. There's worries that all this Dubai thing won't be so nice and neat. So it's leading to a little bit of turmoil this morning. S&Ps are down about 8 or 9. Just looking at the Qs, they were down 45 cents. Come a little bit off their lows. It's going to be a very, very interesting day. You got to focus on the things that are in the news. There's a whole many of them on the blog. Focus on some contrarian players as well, because things are really going to be moving around today. Before the open, I commented on the blog, I noted in the chat room and on audio. Apple was down. And this is the kind of play you want to look for as well. Simply because the whole market was down. But it was actually upgraded this morning by a brokerage house, and it was up last night on the FedEx story, because the theory goes that if FedEx is shipping more product, one of the products will be Apple's stuff. So with it up stuff, well, various products, so up 70 or 80 cents, it was down this morning. So with the thing having been beaten down, it's the perfect kind of play that you buy through on change. So again, that's the kind of play you want to look for this morning. A few other things, RWC has doubled this morning. It's not shortable, so please everyone try not to short it. Just watch from the tape. FedEx, UPS are both up on earnings. PIP and EBS both had negative drug news. Major earnings of the morning, 3M and McDonald's are both down. And then warned for the quarter, McDonald's negative same-store sales. Others numbers out. There's a slew of news. So again, just get through the blog. Rob, you want to pat on what I'm saying?
What I'm watching here is that with the cold front coming in, the natural gas has been up.
That's a good point.
And so we're seeing a lot of weakness with the oil coming down at the same time. But I've been watching Chesapeake for the last hour now. Chesapeake has now been up 18 cents. So I'm looking at any of the heavily leveraged natural gas companies. If there's a bounce off the opening drop, like XTO, and like COG, NFX, HK, anything heavily leveraged to natural gas is more likely to bounce than anything else. I'm seeing RIM bid up a little bit here. Also, with oil coming down, what I've discussed the last few days is the most heavily leveraged there was the oil services. So I'm looking for short side setups in the oil services, your Rig, your Diamond Offshore, Halliburton, Schlumberger, stuff like that. We're also trying to break out this range, which, you know, obviously we're always going to question that the first move is correct. But in the Dow, the big names that had the tight bands that suggested a breaking move are now moving, like Mini Mines. And I'm watching GE, which has very tight bands. I know it's tough 20 in that one. But what tends to happen in a tight band breakout is either it just breaks and it really never recovers during this day, or it snaps right back up before trying to make another move down. So obviously, what I'm saying is this opening is going to be very tricky. So I'd prefer to wait for better setups, and I do like the counter trending setups better of looking for natural gas companies that are bid up now. Chesapeake's up 24 cents. They're bidding this thing up. I don't want to chase it, but that's the kind of thing I'm looking for.
Yeah, I agree with you on the relative strength. And then just one other note to what Rob was saying. If natural gas are up, oil, I know it doesn't make any sense, but, and Rob, you'll probably know a lot more about this than I would, could also be going to rally a little bit just because it's a whole energy play, even though oil doesn't really have a whole lot to do with natural gas. And also, it's worth noting too, with what Rob was saying with RIM, what I was saying with Apple, Amazon's up also. Big cap tech is actually slightly stronger. It's getting a little bit of bid this morning. Google's down 3, but that's something else to keep an eye on as well. Frank, you have anything?
Free or no auction at 1 o'clock. And I think that your blog was good this morning. It's all about where you enter the trade.
Yeah. Thank you. Anything else?
Well, I'd like to say that you heard me whining and complaining about trading Apple, trading Goldman Sachs. I went over the numbers yesterday, and there's only one person who makes money trading Goldman Sachs or Apple. One person in our entire company. It's Eric, and it's not even a major winner for him. The major money is made on some of the more reasonable price stocks, and if you're trading Apple, which is $180, $190, or call it $190 a share, if you're trading that, rarely does anyone in this entire company make $1 on Apple. $1 on Apple is 10 cents on an $18, $19 stock. Okay, so on Apple, the criteria for entering the trade should be $2 easy, opposed to 20 cents easy. And if you want to be more liberal, it doesn't have to be 20 cents easy, but it doesn't have to be $2 easy, but it's definitely not 20 cents. 20 cents is not even, you're not even right or wrong yet at 20 cents on Apple. But people will get scared out. People tend, and another thing is that if you trade normally 1,000 shares of an $18 stock, that's $18,000. Okay, to go ahead and do the same thing on a $190 stock, you're trading $190,000 worth of stock for one. That's equivalent to buying 10,000 shares of a $19 stock. Nobody does it. People have the thrill of the aura that they want to trade the Apple because you can move $3. But it's all relative to the amount of capital put up and the percentage of the move. Apple, most people don't even know where the true price of it is based on time and sales. They could be ranges, prints 15 cents away, 20 cents away, with the stock not even moving. Okay, and I just haven't seen the success in trading Apple. So I don't.
The only very slight contrarian play before I back you up 100% is if it's a special circumstance like this morning, in terms of when all the news was out, and it's good news, but the stock is beaten down because of the market. But other than that, what Brendan is saying is 100% right, because the thing is, there's so much noise in that. If, let's say right now, it's at the high of the morning, it's 189.40 approximately. It goes down to 189.10, and you want to buy at 189.40, well, it may eventually go to 190 this morning, but if you pay 189.40 even for 500 shares of stock, and it goes to 189.25, you're petrified, you get out. There's just so much noise, so you need a trigger to that kind of trade.
And, if what you're...
And elsewhere, you don't want to do it in a neutral market either. Well, that's the other point. Friday was very, very busy, yesterday was neutral. So
So-
it makes it very hard.
So it's, it might be fun to trade Apple, but